Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap, and this was one of those days, folks. This was one of those days where you remember why you invest, why you buy the dip, and why ultimately the decision to allocate capital, as gut-wrenching as it can be when you see it disappear and evaporate in 2 weeks, 3 weeks, and you're down 30, 40%, it can all come back, even if not entirely, even though I think a lot of people now are green year to date. That's how good this day was. If you have patience, if you buy the dip and you continue investing in the market. And I think most of us are not strategically timing every little itty bitty move we do in the market. Most of us just buy the dip and hope to buy the best companies in the world. This was one of the best days in the market, particularly because of this stat right here. This was the first time all month in April that we've had 3 green days in a row. And as a result, maybe, just maybe, we can kind of move past some of the volatility and we can create a trend of momentum to the upside. We got Google earnings. We're going to talk about Palantir. We're going to talk about Trump. Said some more stuff with China, India. We got some good stuff there in the context of what that means for further trade deals. Lots to get into. Let's get into it. All right, folks. So let's start off with what happened in the markets today. S&P 500 up about 2%. Everything is green. I mean, pretty much everything. Palantir. It's pretty damn incredible. We were above $100 again, second day in a row. It's been a long time since we've seen 100 on Palantir, but we are back there. 107.72 is where we got to. Right now I'm looking at it. We're at about 106.95. I mean, it's a green day. Rocket Lab's up 8%, 21.92. We got Nvidia 106.20. That's up 3%. You had a Hoodie 47.93. That's up 7.32%. We got to 48.28. We'll also be talking a little bit more about Robinhood in a bit because we did have Josh Brown and Bryn Talkington on CNBC say some really interesting things about the company. Robinhood up 8%. Even Tesla, which again did not have the best earnings. Tesla right here, 256, up 2.3% on the day. All right, so why is that happening? Well, I think there's a couple of nuances to this. First, let's just talk in general what happened today with Trump in the markets. In a nutshell, Basant said we are getting very close to an India deal. This is what Fox was reporting. Seems like other sources have confirmed that an India deal is very likely. And that India deal is setting up the framework for a deal with Australia, South Korea, and Japan. So that in and of itself, that news came out around 9:30 this morning, got the market to be excited. And as a result, we saw that pump as soon as the market opened. Then throughout the middle of the day, Trump did a couple of different press conferences. One was just talking to reporters. The other one was with the Norway prime minister. He was asked, hey, have you started conversations with China? And I will give you the exact time at 12:40 p.m. Eastern. Trump said there was a meeting with China this morning. That's it. Really didn't get any other details. They didn't talk about if the meeting was good, meeting was bad. He just says there was a meeting with China this morning. That is what got the S&P 500 to really start pumping and get into that green 2% range on the day. Now, the Chinese Foreign Ministry came out yesterday and said we have not meaningfully started discussions with the United States. Trump says we have started discussions. I don't think both sides are lying here. I think both sides are basically talking past each other. So I think, yeah, they've had some conversations back and forth, some phone calls. But I think the phone calls haven't been necessarily meaningful to establish a foundation to really begin negotiations similar to what we've seen with India and the United States. So is Trump right that they've had phone calls? Yeah. Is the Chinese Foreign Ministry right that they really haven't had any meaningful discussions? Yeah. And the market's moving on this idea that says, hey, we've got some progress on the trade deals with India, and maybe that's going to set up the framework for more deals in the future. And they're taking Trump at his word of just like, hey, we've had some conversations with China. Nothing material has started yet. But obviously that means that we're probably not going to have 145% tariffs, even though Trump was kind of trying to walk that back yesterday. And that tariffs across the entire world have a chance to potentially come down, which is my theory. My theory is this 10% universal tariff is probably going to come down a bit to maybe 5%. Maybe he's going to get rid of it because I don't think you can have 10% across the entire world. I don't think Trump wants to have 10% across the world. I think he just wants to be able to get good deals. And if he gets those good deals, then maybe those tariff rates will come down, which obviously would be very bullish for the broader market. So that's what we have today. And that's what got the markets to get some momentum and get more exciting. JP Morgan comes out with a note today that I thought was very interesting. Here's exactly what they said. We find the sell-off in U.S. equities has likely been driven to a great extent by broad de-risking by hedge funds, which is confirmed based on the macro data we saw a couple of days ago that hedge funds exposure to the Mag 7 is the lowest it's been in the past 2 years. They write, there is little evidence so far of significant selling of U.S. equities by foreign investors, while domestic retail investors have continued to buy. And that is absolutely correct. Retail has bought the dip. There was an S&P 500 chart that came out yesterday that said retail has been buying the dip the fastest they have in 2 years. So retail investors, people that are probably watching the channel, myself, we have been buying the dip. Importantly, historical experience suggests that net outflows by foreign investors alone do not imply negative performance or underperformance of U.S. equities versus rest of world equities. So as long as domestic investors, especially retail, continue to buy. Meaning, yes, there have been foreign outflows, but those foreign outflows are insignificant if the broader public in the United States continues to buy. And by the way, that creates a lot of FOMO to get the foreign investors to come back in, which then leads to a compounding effect of more outperformance. Looking ahead, historical patterns suggest that if a U.S. recession materializes, U.S. equity prices and the 10-year Treasury yield would be range-bound for about a year, while credit spreads and the dollar would drift higher. Conversely, if a recession does not materialize, the past 3 months' moves in U.S. asset prices would likely reverse, aka we would get back to the levels that we were at probably before we had all this tariff volatility take place. So you got JP Morgan basically saying, hey, in terms of do you trust the green or not? Yeah, you can if you believe we don't have a recession, because you have earnings growth, you have inflation that continues to come down, you have a Fed that's probably going to cut. We did have a Fed president come on CNBC today, and they said, hey, June is possible. They didn't say it's likely. They didn't say that it's not going to happen, but they said it is possible. I think the probabilities of June are starting to become more possible to me as well if Trump walks back the tariffs, and if the Fed starts recognizing that tariffs theoretically would slow down growth, which would slow down inflation, which means you should probably cut in order to make sure we deal with the implications of demand destruction. I don't know if the Fed's going to be acute enough to decide to do that, but nonetheless, I think there is an argument that we get that June cut. Earnings, here's a stat on earnings so far. On earnings, 25% of the S&P 500 has reported in terms of their earnings, and we had Google today. 7.4% year-over-year earnings growth. 78% of them have beat on EPS. So earnings are not bad so far. I know we're only a quarter of the way in, but so far, most of the financials, a lot of the industrials, a ton of the SaaS companies that have already started, ServiceNow having an explosive quarter yesterday, up 15%. They've begun to set the framework to say, we're going to have a good earnings. Inflation's coming down. Tariff volatility comes back. You put all that together, there is a shot for 2025 to be a very bullish year. It's just we have to go through a lot of stuff to get here. So from that perspective, Green Day, congrats to everybody. Palantir back over $100. Robinhood trying to get back to 50. It's been an incredible day. Grab was up 6% on the day. We talked about Grab yesterday. They had a really important board of directors addition to their board. It's at 465 right now. It's up about 6.24%. I think there's a chance that this works out. However, I don't blame anyone for selling covered calls or selling some of their position, because at the end of the day, we've been whipsawed so much back and forth based on random things that Trump says. So I can't blame you if you're selling, but this is 3 days in a row of green. And so maybe that momentum can continue into the future. Okay, a couple headlines right here on Amazon, Nvidia, and Apple. So first thing on Apple, small headline, but important one. Apple reportedly wants to increase how many iPhones it makes in India by 10% this year. Now, why is this important? Number one, they're trying to get out of China. There's a lot of geopolitical implications to being in China, obviously with the tariffs. So that is starting to see a little bit of a shift. Second of all, we're in negotiations with a trade deal in India. I mean, if the United States can say, hey, if you give us some better concessions, we're going to give more priority to Apple to potentially get to India so they can increase domestic manufacturing inside of India, which increases jobs for Indians. And obviously the government, I would imagine India would want Apple to become a bigger part of their economy. Maybe there's a world, just throwing it out there, where Apple is used in a way to negotiate a better trade deal. It is the most valuable company in the world. I think the administration potentially could get some benefits off that. So Apple's trying to get into India. And then Amazon, Nvidia headline. So 2 quotes we have from Amazon and Nvidia. They say data center demand isn't slowing down. Data center demand isn't slowing down. Amazon and Nvidia executives said Thursday that the construction of artificial intelligence data centers is not slowing down, as recession fears have some investors questioning whether tech companies will pull back on their plans. So here's what Amazon said. There's been really no significant change. We continue to see very strong demand, and we're looking both in the next couple of years as well as long-term and seeing the numbers only going up. Looks like they're going to keep spending on their CapEx. Nvidia says we haven't seen a pullback. AI compute and power needs are still climbing. DeepSeek fears were just a knee-jerk reaction. So you're starting to see some of these larger tech companies say, hey, the CapEx AI data center trade is on. It's not going anywhere. Market momentum and sentiment starting to shift to the positive, to the upside. You got these companies that are not pulling back AI spend, tariffs going down. I mean, you put all those together, there can be a world where the Max 7, which has not worked out this year, down 20% year to date in terms of all those companies, might end up being one of the better trades this year. By the way, I put this question on Twitter, and I would love everyone to respond to it in the comments as well. Out of all the Max 7, which one have you, if you have, take advantage of in terms of this dip, this drawdown of 20% year to date, many of them still down 20% year to date? Which one did you choose to allocate the heaviest to and build your position? My answer, you guys already know the reasoning, is Nvidia. I believe that there's going to be a need for more computational infrastructure with more reasoning models to get to AGI. So that demand is going to be not cyclical for Nvidia, but probably a 5 to 10 year long demand cycle. Even if it's not growing 300% every year, it's going to be a decent chunk of demand. And I think if you look at their forward earnings and you compare it to like a Walmart or Costco, it just becomes ridiculous how undervalued it is. So I would love to know which stocks in the Mag 7 and why did you pick to allocate the heaviest to during the Mag 7 drawdown. Next update is on Palantir. So Palantir up a lot today. Very nice to see this momentum. Palantir now year to date is currently 41% green. We've got earnings coming up. Again, I'll have a lot more content going into earnings in terms of my projections and my ideas of Palantir and what earnings could look like. However, I just wanted to give a quick shout out to Uncle Chad, who is in the Palantir community, and he is a big part of the reason why Palantir is engaged so heavily with retail. He was one of the first people that got me out to AIPCon. So love Chad. So Chad's one of the chief architects of AIP and Palantir. And today they came out with a new feature inside of the software, and it's called vibe coding. Now, for people that are not familiar with what vibe coding is, it's kind of been going viral. There's a company called Cursor. They just were the fastest company to get to $100 million in annual recurring revenue, just raised that $10 billion. It's essentially AI helping software engineers code, AKA getting ready for the replacement of software engineers. But, I think some of those fears of the software engineers being replaced by AI are overblown. In reality, a lot of software engineers are going to be using AI to become even more productive. Maybe the mid-level junior engineers that aren't that good might get replaced, but really good engineers are just going to get really better with AI. So the concept of vibe coding, which has kind of become this cultural phenomenon, is the idea that you can tell a chatbot, for lack of a better word, what you want to see happen inside of your code. So if you're building an app for fitness and you're trying to track people's calories, instead of you literally coding the parameters of the function that opens up a food that shows you the calories, you can just vibe code it and tell whatever software you're using, hey, blah, 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 type it in, and then it pulls it up. And what does that do? That saves you time. That automates tasks that really high-level engineers don't need to be spending their time on. And then really complex situations, if you're able to vibe code with AI to help you figure this stuff out, theoretically, you should have better scenarios and solutions and different simulations to be able to do a better job and to get more effective when it comes to building. Palantir and Chad released a video today called Vibe Coding in Palantir AIP. And so they are bringing vibe coding, the ability to use AI to help you become a better coder, and mixing that in with the ontology, which is actually grounded in the truth of the enterprise, the benefits of the ontology mixed with the value of AIP on top of the concept of vibe coding. They put all that together, and that's where you have vibe coding in Palantir AIP. What is the takeaway for investors? Number one, Palantir is up to date on a lot of the trends going on in tech. One of the easiest ways for tech companies to fall behind is if they don't capitalize and take advantage of all the different trends and features that are going on inside of the technology ecosystem. I mean, the fact that Palantir came up with AIP in June of 2023, ChatGPT went viral a couple months before that, and they pivoted the entire company to AIP. I mean, think of how good of a name that is, artificial intelligence platform, and they became the company that got to really brand that name. I think they're on top of trends, and they're getting a lot of momentum to be able to continue to be on top of those trends. And then the final thing I want to say on Palantir, and the reason it's getting a bump, Salesforce, Snowflake, Datadog, all these companies getting a bump today, is because of ServiceNow. ServiceNow is the company that sets up if software spend is going to be strong every quarter. They're the first software company, SaaS company, to report. Bill McDermott, CEO of ServiceNow, not only showed 19% year-over-year growth, which is not hyper growth, but it's pretty damn good growth given the size and scale of a company that they are. A lot of enterprises, probably a lot of you that are watching right now, use ServiceNow inside of your company. So it's a pretty massive company. 19% growth is still pretty damn incredible. AI growth is up 4x year-over-year, 400% year-over-year. They have a $6 billion backlog when it comes to AI. Now, Bill McDermott was asked, hey, why are companies coming to you guys? Why are you getting all this momentum and all this value? And he said, companies are realizing that if they can't grow the top line because of whatever volatility that exists in their business, they can use AI to grow the bottom line, aka better margins. If you have better margins, you have more net income. If you have more net income, you have better earnings per share, which means you can get a better price to earnings multiple on your shares. So from that perspective, ServiceNow is setting up the foundation for software spend to be really strong. We already know Palantir's got a lot of growth baked in. I think this could be a very strong quarter. We got the NATO growth, we got European growth. Obviously, US commercial is going well. They launched 15 deals back to back a couple months ago in AIPCon. I think it's going to be a good quarter. ServiceNow kind of set up the foundation for software spend to be very high. That's why I think Palantir is running right now. Is it running Is it kind of pulling a lot of the earnings momentum forward? Yeah. But if earnings is really that good and we got a good macro and you got everything going strong in the context of software stocks, that could continue to mean earnings propels the stock and allows it to do better. So Palantir, great day, back to triple digits. And ServiceNow really shows that software spend is going up, which means I think Palantir has a pretty strong chance to do well in Q1. All right, guys, last part of the daily recap today. I'm going to have to make this quick. I'm at the airport right now on the way to Toronto. Google crushed it. Google legitimately crushed it. I made a post on X. I'll link that in the description. You can read, get my longer thoughts, but they crushed it. EPS beat by 40%, 281 versus 201 expected. Revenue beat by 1%, $70 billion share buyback, $75 billion CapEx spend, operating margins from 32 to 34%. I mean, this was one of those quarters. We listened to the full call. The flight actually got delayed. I wasn't going to stream the call, but the flight got delayed. And that's why I was able to stay on the market close to stream the call. It was a different type of Sundar. Within 5 minutes, the chat actually counted. He said AI 18 times. And I think it ended up being like 70 or 80 times for the entire call. So this was one of those quarters where Google put up the numbers. They put their big boy pants on in terms of explaining and communicating AI to the marketplace. The reason Google trades at 14 times, I don't think is really because of just the antitrust stuff. It's because the market doesn't believe they're an AI name. And Google today said, hey, we have 350 million monthly active users on Gemini. We have 270 million people paying us yearly for Google One, YouTube Premium, etc. And we have 35 million daily active users on Gemini, 1.5 billion daily active users using the AI search overviews in Google. Waymo, instead of doing 200,000 paid rides a week, which was a month ago they announced, now is doing 250,000. A year ago, that was 50,000 a week, paid rides. So the idea that Google's not an AI play, they even mentioned Gemini Robotics, they invested in Aptronic, which is a robot company. I mean, I think Sundar basically told the market, we're an AI play. You're not treating us like an AI play, which is why you have this crappy multiple on us. It's time to give us a better multiple because we're an AI play. Shout out to the chat. They said 70% versus 30% on if I should buy 100 shares of Google at 158 right before earnings. We bought those 100 shares. I'm planning to hold those shares and add to them. Say if the market fades this earnings for whatever reason, I'll buy more. So incredible quarter. Can't really find a red flag in it. Sundar crushed the call. And for anyone that owns Google, congrats. It was an awesome, awesome quarter. I got to go. Daily recap. We're out. Thank you everybody for being here. See you guys on the next one.